Now we're just going to kick off on just looking at total U.S. product supplied. And here you can see that there is a big drop down in terms of what the overall number is. So, we wanted to look at what is happening in 2020, then let's looking at the overall average. So you can see we're starting to roll back over. We're starting to come into that seasonally slow period, which you can see in 2017, 19, and 18, how we normally have that dip that kind of goes through October. The problem is just this severity of in which that drop happened, which is what is going to start to pull us down. And it's really coming from the perspective of what's happening in distillate and jet fuel. So gasoline, we've talked about kind of normalizing, kind of sitting here, still starting to move down a little bit. But again, it's really that distillate and jet fuel overhang in terms of total demand, which we're going to go through in a bit more detail. But this is just looking at everything together to give you an idea on the overhang that we expect, not only in crude pricing, but also in refinery throughput, given that storage is already at all-time highs or near all-time highs, depending on which product we're talking about. And now this was the big shock, where we had a big build of distillate of 3.46 million barrels. And you can see it was pretty much equally distributed. Obviously, PADD 3 was a little bit bigger. And you can see that we're starting to spike back up and just maintaining these 1980-like numbers. And the problem as we go into the beginning of this year is, the beginning of the winter season, is how quickly will we see heating oil demand pick up? What is diesel demand looking like? And we're starting to see some of that slow down. As we were talking about, that was going to happen with trucking and as we go through rail. So this is going to continue to be a big overhang when you consider what refiners are going to make. Because when you make gasoline, you inherently make diesel, unless you go through specific processes, but inherently you make diesel. So you need a place to put it. When you make diesel, you inherently make gasoline. So they're always going to be tied to each other. So when you have these kind of levels, there are other ways to make gasoline in terms of adjusting kind of crude slate, going through a different unit. But when you're looking at things overall, you're starting to see a lot of these issues. And this is going to be a bigger problem as we go forward. And it's going to put a weight on just not only the crack spreads, but also how much refiners are going to operate. And this is looking at things a little bit, breaking it out and looking at the overall demand for diesel. You can see that there was a big drop overall just coming into this period. Now, we just don't think that we're going to start to get back up because we're starting to see a little bit of a slowdown in trucking. Shipping remains an overhang, and rail is strong, comparative to the last few weeks. But again, it's still down about 7% week over week. Year over year for this time of year, which is going to continue to kind of keep this capped overall. But we're going to start to operate at that lower level. But again, it's just going to be a matter of how quickly can we see some of this heating oil demand come back. And this is where we start talking about trucking. So as we talked about last week, we expected things start to roll over a little bit. Again, nothing crazy in terms of coming all the way back down. But when you look at this blue line at the bottom and you can see that truck availability, as you get truck availability really coming back down, you inherently going to start to see some of this roll over, especially when we have pricing, specifically specialized trucks, refrigerated trucks, trending so much higher. You're going to start to kind of normalize. What do inventories look like? Do I need to truck this now? Is there a rail option? Is there a shipping option that can get away from some of this trucking, just given where some of the prices have gone? Again, diesel prices being so low, the overall rates remain, they would be much worse if you think about where diesel prices could be. But just given where the availability is, how it continues to kind of move lower is going to impact those rates. So you're starting to see a little bit of a slowdown in terms of just total demand. And as everything has been backfilled for back to school and we start to go into a little bit of a slower period in terms of overall purchases on the consumer level, this is going to start to trend a little bit lower. But again, just because of the issues with COVID, some of these supply chain disruptions, this is going to remain relatively elevated versus comparative years, just given what the demands are and the needs are for trucking at this point. Now, shifting straight into gasoline, just because we're starting to see some of the things that we've been talking about play out. Now, the draw was only 380,000 barrels. Now, this was underwhelming, even though it was still a draw. It wasn't as big as expected. And the reason why was we started to have those imports that we talked about hitting pad 1, which is why the East Coast had a build of 1.76 million barrels, because we're starting to see some of those European imports show up. Again, it's going to be lumpy, so you're going to have some of these imports come and go, but the trend is going to continue to attract additional shipments into pad 1. Now, we did get some floating storage of gasoline that was supposed to get unloaded, get shifted down into West Africa. So we're going to start to see kind of these musical ships moving around. So we're just going to keep tracking it. But imports will remain elevated through the remainder of September. So this is just something to watch, and it'll appear in pad 1. Now, when we look at pad 3 in the Gulf of Mexico, again, it's just going to be those timing delays in terms of what our exports look like, what our runs look like. And you can see that we're now back within the top of the cloud, but we're starting to kind of level off. And given where normal demand is for the seasonal period, we'll start to see some of these builds increase, specifically in gasoline overall. Now, when we shifted the demand level, you can see that we had a little bit of a bounce, and we're going to remain within this confidence range for the next 2 weeks between that, let's call it 8.35 to about 8.55, just given kind of where we sit overall. We're going to get a little bit of a backflow after Sally passes because we had a little bit of a pull through ahead of that. People purchased gasoline, so we're going to get a little bit of noise this week and into next week, which will leave us a little bit of an uncertainty overall, because when we look at the gas buddy data there, things came down a little bit week over week. When we start to consider the fact that Labor Day was obviously a bigger weekend, and we had a decent increase as people start to normalize, as we look to get back to normal when we're talking about overall businesses and people driving instead of taking mass transit. What is the optionality? We know JP Morgan is telling people that they have to be back in the office by the end of September. So what is that going to be? Are people going to drive? Are people going to take the train? Are they going to try to stagger? These are things that are going to start to play out over the next couple of months, which we're going to, remain very focused on, because it's going to be very indicative as to where is gasoline demand going to go. Now, even though we're going to have some normalcy in terms of businesses as we see people driving a bit more, jet fuel just won't see the same type of uplift as business travel remains very weak. We've talked about how we're going to start to kind of balance out within these levels, and there's no reason why we see that changing given where the demand is overall. And when we look at passenger pass-through, again, same thing. We think we're going to hold this 525 to kind of 725, and we're just going to hold that line through the remainder, really for the remainder of the year, unless we see any real change, which, just based on what people are talking about, how people are moving, it just doesn't seem likely, especially with businesses that are already experiencing a stress in revenue, uncertainty as to what comes next. You're going to see a lot of this kind of just drift sideways, which is going to hurt overall demand. And when we look at just global, backdrop, you can see in terms of U.S., you can see that big drop of about 200 flights. And the problem is, which is something we're going to talk about in the economy show, the expectations from June, August, and September have come down considerably, just because we're not seeing that kind of uplift. China had a little bit of an increase, but again, they shut down just because, and they're starting to normalize a little bit. And by shut down, I mean they had a little bit of a COVID scare, so they took flights down quickly, and now they're coming back. And you can see things just kind of trading to this, sideways, with Europe seeing a little bit more of a reduction, just as they've had a COVID increase, which is again just kind of weighing on that global jet fuel demand, as we see additional pressure on a global level, which is something we're going to talk about in the OPEC and economy show. So looking at mobility data, again, the trend is coming back down as we average out, given the fact that this is now factoring in Labor Day. We had the Labor Day bump, and now we're coming back down. Workplaces, again, that's something that's going to kind of average out. The retail, recreation is going to start to fall. Parks are going to start to fall, especially as we have that back to school, back to work mentality, which is going to put an overall overhang. But again, looking at it on the 7-day average, you can see not much has really shifted as we consider what is gasoline demand going to be. For open table, just looking at the movement of people, here's, we've talked about kind of hanging between this 45, down 45 to down 40 level. And There's really nothing to change that, especially as it starts to get colder. People start to either go indoors, or if you can't go indoors, you have to cut capacity, which is going to kind of keep us at this normalized level. And then when we look at it on a global backdrop, you can see the U.S. is going to kind of stay within this 45 to 52 down average. And as we go through the remainder of September and into October and November, we're going to have additional weight as again, capacity is going to be cut. You can't use the sidewalks. You can't use, you can. It's just what are people, and then the propane trade is going to get great because you're going to need those heaters constantly going to keep people outside. But again, that's just going to be an overall overhang. But you can see that we're starting to kind of balance out. We're starting to see kind of this normalization. But again, this is going to put weight on restaurants because even if you have a 30, 40% occupancy indoors, that's just not enough to keep the restaurant solvent. Maybe you're breaking even. Hopefully you're breaking even, but you're probably losing money. And the question is going to be, how can you operate losing money? Again, that comes down to food. You have to move food on a truck. You have to have people driving there. Or if you do delivery, you have to have a car going there. So that's why we look at these things so much, because this is a relatively good indicator in terms of some of that discretionary cash and people moving around. Looking at the MTA entries, we're starting to see that uptick as the back to school takes hold, as people start to kind of get into that normalization. We see the 7-day moving average trending higher, now back at about 1.3 million people coming, entering. Again, this is something that's going to continue to kind of trend higher, and it's going to come to the backdrop of how long can you sit in LIE traffic before you're like, you know what, I'll take my chances with COVID because this traffic is brutal. And that's where you're going to start to see maybe a little bit more people coming on, especially as you're pushed back into the office. Now that we've kind of looked at what is happening within the U.S., it's always important to appreciate what's happening abroad, as the export market remains very important, specifically for PADD 3 in the Gulf of Mexico, into trying to get some of these additional product builds into the market, trying to keep things moving and keeping things fluid so that they can maintain a certain amount of operation.